Hello everyone, and welcome back to my channel, The Trading Mystic. There is an introductory video available for you if you would like to know more about what this channel has to offer. In this video, I will take you through a couple of trading strategies for a stock trading in the National Stock Exchange, India. One of the strategies will signal long trades, while the other one is for taking short positions. I will also share the backtest results and a detailed analysis, both individually and the strategies put together, and also share a couple of examples with the help of charts. What this video does not cover is the basics of technical analysis. For that, I will be creating separate bite-sized videos explaining the concepts of technical indicators and oscillators, how they work, how they are calculated, and so on. So, without further ado, let's get started. Here is our first trading strategy for the stock VOLTAS Ltd trading in the NSE. This is a positional buy or long strategy, which means we buy first and sell after a few days. We're going to make use of three technical indicators here. The first one is the average true range, also known as ATR. We'll use the 11-period ATR. The second one is the relative strength index, RSI. We'll use the 14-period RSI. And the last one is the average directional index, ADX, again 14 period. So how does this strategy work? There are three conditions here. Condition 1 says that the current ATR value has to be less than the value of ATR the day before previous day. Condition number 2 says that the current ADX value has to be less than previous day's ADX value at closing. And condition 3, current RSI value has to be less than previous day's RSI value at closing. When these three conditions are met, we buy the stock. Now let's look at when to buy and sell the stock. We look for these strategy conditions at market closing, preferably 5 to 10 minutes before the market ends, because that's when the volatility reduces and we have a good estimate of the price and the value at which the stock and the technical indicators are going to close. So once we get a signal, we buy the stock and we sell on day 5 at market closing. Now let's look at the chart and understand how this strategy is traded. In front of you is the chart of VOLTAS on tradingview.com, and here at the top you will be able to see the open, high, low and closing price of the stock on any particular day. Here the red line is the ATR. Value of ATR can be seen here in red. And this is 11-period ATR. Right below that, the blue line is the RSI, value of which can be seen here in blue. And this is 14-period RSI line. And even below that is the average directional index, 14-period ADX, and its value can be seen here in red. Now let's go to the 1st of October and look for condition 1. As per condition 1, we need to compare ATRs. So on 1st of October, ATR was at 29.23 at market closing. So 5 minutes prior to market closing, it should have been around 29.2. That's the assumption here. Now we're going to compare this value with the value of ATR the day before. So we go back a couple of days to the 29th of September. And on 29th, ATR value was at 29.33. So clearly the current value on the 1st of October is less than the value the day before. So condition 1 is met here. Now let's look at condition 2. RSI on the 1st of October was at 63.67. We compare that with the previous day's value, which was 64.69. So again, RSI is less than the previous RSI. Now let's look at condition 3. ADX value on the 1st of October was at 39.35. That is less than the value on the 30th of September, which was at 40.47. So all three conditions are met. We go ahead and buy VOLTAS stock at market closing. So if you take a look at the top, the closing price was 1215.25. So we buy around that price before the market ends. All right. And if this is day 1, this is day 2, this is day 3, day 4, and day 5 is 7th of October. That's when we sell the stock at market closing. So the closing price on the 7th of October was 1283. So we try selling it around that price. So we bought at 1215. We sold at approximately 1283. That's a profit of about 5 to 6%. Time to share the backtest results of this positional buy or long strategy with all of you. I did backtesting using last 8 years of data, which is 2014 till 2021. And the results are as follows. The total buy signals or trades were 159. The win rate or the hit ratio of this strategy was 64%. The maximum loss in a trade was 7%, 7.3 to be precise. The maximum profit in a trade was 20%. The cumulative return the strategy generated was 1,175%. And if you take a look at the buy and hold return, which is nothing but you buy the stock at the start of the period, which is 1st of Jan 2014, and if you sell at the end of the period on 31st of December 2021, you would have earned 917%. Of course, this does not include corporate actions like dividend, but still the cumulative return looks pretty lucrative at 1175. Let's quickly analyze this strategy return plot, which is a visual representation of the negative and positive returns generated by this strategy. So if you take a look at this, all the red dots are the negative returns and the blue ones are the positive returns. In other words, these are the trades that have generated positive return, and the ones in red are the trades that have resulted in negative returns. It's good to see that all of our losses or the red dots are under 7 to 8%, as you can see on the screen. And this is the minus 5% line. Okay, so this is the one that resulted in a minus 7% or 7.3% loss. Okay, but if you take a look at profits, there are quite a few that have generated either 10% or more than that. And the trade where we got 20% return is right here. Okay, let's go ahead and analyze another period here, which is 2020 to 2021, which looks like a fantastic year. We had only 4 loss-making trades, out of which 3 were under 5%. There's only 1 trade here wherein we lost about 6 to 7%. The profit-making trades or positive returns, quite a few of them, and we also have 3 of them generating more than 5% of profits. And there is 1 here between the 15% and 20% line. Now, let me explain how the cumulative return was calculated. So let's write day here and balance here. Okay, and we're going to start off with $100 in this strategy. And let's assume that we get our first buy signal here. So this becomes our day 1, and we will invest the entire $100 to buy stocks. Okay, as per the strategy, once we have bought, we're going to sell it on day 5. So let me go ahead and write sell here. So we sell on day 5, assuming we make a profit of 5% in this trade. When we sell, our balance will become $105, which is the $100 that we invested. and the $5 profit. Okay. Now, if this trade results in a loss of 5%, then our balance will become $95. This is simple mathematics. Now, let's assume that our next buy signal is here. So when we get our next buy signal, we are going to reinvest our balance. Okay. So when I say reinvest, be it 105 or 95, we will use the entire balance to buy stocks. And we will follow this rule till the time we use the strategy. All right. Now there is another logic here. If I have bought here on day 1, so on day 2, day 3, day 4, I don't have any money in my account. Okay. So if I get a buy signal on either of these days, then I'm going to simply ignore the signal. All right. Now, if you have followed this strategy, let's say for a year or 2 or 3 years, or even for a few months, and assuming your account balance becomes, let's say, $200, which means you started off with $100 and that has now become $200. So that's a return. Return should be in percentage. So that's a return of 100%. And this is also known as cumulative return. Here's the next strategy for the same stock, VOLTAS. This is a positional sell or short strategy, which means we're going to sell first and then buy back after a few days. This is possible in the equity cash segment if you are holding the stocks already. If not, then this is possible in the derivative segment wherein you can short futures contract and square them off after a few days. The technical indicators and the configuration pretty much remains the same. We'll make use of 11-period ATR, 14-period RSI and 14-period ADX. The strategy again has 3 conditions. Condition 1, ADX has to be greater than 45. ATR value has to be less than its previous day's closing value, and RSI has to be greater than 40. When these 3 conditions are met, we go ahead and sell the stock or short futures contract. Now, when to sell and buy, it's pretty much the same. We're going to look for these conditions at market closing, preferably 5 to 10 minutes before the market ends. As soon as we get a signal, we sell and we buy back on day 5 at market closing. Let's quickly look at the chart and figure out how to trade this strategy. As you can see, this one belongs to VOLTAS and I've already loaded all 3 indicators here, the ATR, RSI and ADX. So let's quickly go to the 18th of October and condition 1 says that ADX has to be greater than 45. So on 18th of October, if you take a look at the bottom to the left, ADX closed at 45.74. So 5 minutes prior to market closing, it should have been around 45.7. So that's clearly greater than 45. So condition 1 is met. Condition 2 says that the ATR value on 18th of October, which was 31.68, has to be less than the value the previous day. Okay, so the previous day ATR was at 31.91. So clearly the current value is less than the previous day's value. So condition 2 is met. Condition 3 says that RSI has to be greater than 40. So if you take a look at 18th of October, RSI closed at 76.82. That is well above 40. So all our conditions are met. It's time to go short or sell VOLTAS. So take a look at the top. The closing price was 1337.70. So we get to short around that price. So this becomes our day 1. Here is day 2, day 3, day 4, and day 5 is the 22nd of October, when we will square off our position, or in other words, we will buy VOLTAS back. Okay, so we're going to buy at the closing price of 1177 approximately. So we sold at 1337 and we bought at 1177. That's an approximate profit of 12%. Let me share the backtest results of this positional sell or short strategy. Okay, the backtesting period again was 2014 to 2021. So here are the results. The total number of trades or sell signals were only 8. Okay, and most of them were after the period 2019, with a few in 2021. But then the hit ratio was 100%, which means all of these 8 trades fetched us profits. And hence, the maximum loss in a trade here is not applicable. The maximum profit in a trade was 12%. It's the same example that I showed you a while ago on the chart. And the cumulative return was 37% approximately. So this is something we can track in the future. The data is too less for us to be very confident, but certainly something for us to look for when VOLTAS signals weakness. I also tried running these two strategies simultaneously, assuming I have 2 trading accounts. So let me just write buy strategy here, and this is sell strategy. So in case of the buy strategy, I got my buy signals somewhere here, and then after a few days I got it here, and maybe, here and here. Okay. Similarly, for the sell strategy, I got my signal somewhere. I'm sorry, I need to write sell here. Okay. Got a sell signal here, then maybe somewhere here, and so on. Okay. But there was one instance when I got a sell signal here and I also got a buy signal here on the same day. Okay. The same day I got both buy and sell signal. So it doesn't make sense to buy and sell at the same time. It's as good as not doing anything. So I ignored these 2 trades. That is 1 trade from the buy strategy and 1 trade from the sell strategy. So I ignored these 2 trades, and this sort of changed the performance of the strategies to a certain extent. So let's take a look at the stats to understand what changed here. So here's the backtest result of our long strategy after I ran both the strategies simultaneously. So the total number of trades reduced by 1 to become 158. The hit ratio went up by 1% to reach 65%. The maximum loss in a trade and maximum profit remained the same. The cumulative return jumped up by over 80% to touch 1,257%. And finally, the backtest result of our short strategy after running both the strategies simultaneously. The total number of trades reduced to 7. It was 8 earlier, if you recollect. But the hit ratio remained the same, 100%. The maximum loss and the maximum profit in a trade remain unchanged. The cumulative return reduced by 2% to reach 35%. I hope you liked the video and the strategies I explained here. Feel free to go ahead and tweak these strategies. Try your own combinations. Try changing the configuration of the technical indicators and see if something else works better for you. But please do not jump the gun and start trading immediately just because you saw some fascinating figures like 100% hit ratio or 1,250% cumulative return. Trading requires a lot of patience. It requires your conviction. You have to observe the market. You can do some paper trading on platforms like tradingview.com. Do your own research, do your own backtesting, and only when you're convinced that you're ready to take risks do you go ahead and trade. All right. So I will be back soon with another strategy. So if you want to stay updated, go ahead and click that subscribe button. You take care. I will see you soon.